Hi there, welcome to kneppyinvests. Today's video, I am going to discuss the Appendix 4C that Damstra released for their March quarter of 2021. This is a company I am interested in, but the share price has been in a downtrend for about 6 months or so. So I am waiting for a bit of a turnaround in the share price and the sentiment in this company because we have seen the share price come down a fair bit in those 6 months. So before we look at their Appendix 4C, just a few facts in terms of this company. Damstra are a provider of enterprise protection solutions with their Enterprise Protection Platform, EPP, and this platform allows organizations to mitigate and reduce unforeseen and unnecessary business risks around people, workplaces, assets, and information. I highly recommend having a look at their website and any presentations to get a better handle of exactly what they do. Ticker code of Damstra is DTC. Market cap of $161 million. And when you compare that to the revenue and annual recurring revenue, which is $33 million, there could be some good value here. And they were operational cash flow positive for the trailing 12 months of $6.1 million. So again, highly recommend having a look at some of their announcements they released. Their Appendix 4C for the March quarter was released on the 27th of April. So now let's have a look at their Appendix 4C for the March quarter. In terms of the Appendix 4C for Damstra, I'm only going to look at Section 1. So there are about 8 sections. And when you do look at the 4C, make sure you go through every section. You don't have to pay close attention to all sections. You can skim through because some of them aren't relevant for every company. But Section 1 is the most important part of the Appendix 4C because this is where you see how the company is performing in their operations. And for Damstra, in the March quarter, they received $7.2 million in receipts. I would prefer that to be a little bit higher, and we'll look at the receipts history in the next slide because it's very important to know the trend in receipts. This number here in isolation tells you nothing. It could be increasing, it could be decreasing. But the most important thing is found right down the bottom, and that tells us whether the company is operational cash flow positive or negative. And for the March quarter, Damstra was actually operational cash flow negative by $375,000. The other thing to pay attention to here is the amount of cash they did burn through all activities. So there's operating activities, financial activities, and investing activities. And in investing activities, Damstra did spend $850,000 on capital expenditure and $1.5 million on intellectual property. So overall, that means they did burn through $3.2 million of cash in the business, and their cash levels fell from $7.6 million to $4.4 million by the end of the March quarter. Damstra listed on the ASX in October 2019, so we only have 6 quarters of history here. I do prefer 2 years of history to ideally get a trend in the cash receipts of a company. And when I look at the cash receipts history, I want to see an upwards trend. And we don't quite see that with Damstra just yet because the last 3 quarters, it's just leveled off at just above $7 million. We did see a little bit of a spike in April 2020, and maybe Damstra was affected by COVID-19. That's why we saw receipts fall off for the June quarter of 2020 from 7.2 to 4.6, and then it bounced straight back up. But we haven't seen receipts for Damstra get above that, or well above that $7 million. So I do want to see receipts grow for the next few quarters. So paying a particular attention to the receipts of the June quarter, and hopefully we do see higher receipts. But otherwise, nothing to get overly excited right here. But in saying that, the market is not valuing Damstra as if their receipts is growing quite strongly. It is actually valuing that the receipts are growing quite slowly just based off the annual recurring revenue, and the market cap of the company is actually good value for this sort of company. Last thing we'll do with Damstra is look at 2 charts. The weekly chart going back to when they listed in October 2019, and we'll finish up with the daily chart looking at the last 6 months or a year or so. And we can see they listed just before the COVID-19 financial panic. So they listed just above $1. And the share price fell below 50 cents for a very brief period, probably around March 23rd of 2020. But the share price did rally just like many other stocks on the ASX, and the share price went from that low of about 50 cents to a high in October, nearly $2.50, just shy of $2.50. So that's a nice run in about 6 months or so, 5-bagger. If you bought at the low and sold at the high. Fun enough, that little bit of a rise in the share price in October from $1.80 to that high of $2.50 was caused by one reason and one reason only, and that was Damstra was recommended by one of the Motley Fool recommending services. I can't remember which one, but usually when this recommending service releases one of their recommendations at noon, the share price will pop up because everyone rushes in to buy it. And it seems like that was a bad recommendation because it seems like they picked the top, and you want to pick the bottom, not the top, because the share price has been falling ever since then. And in fact, it's gone from $2.50 at the high, or nearly $2.50, to a current share price of 85 cents. And the share price is in a well-defined downtrend at this point in time. No reason to buy into it unless or until we see this downtrend finish. So even though I am interested in Damstra for the long term, I am just staying clear until I see a bit of a shift in the sentiment around the company. Motley Fool recommended Damstra on the 7th of October. The share price increased 16% right on noon. I think most of that 60% was a few minutes after they released the recommendation on noon. So it increased 16% on that day. In fact, the share price rose from $1.82 to a high of $2.44 the next day, and that was the peak in the share price for Damstra. So you can see that's about 6 months ago, and then the share price has been falling ever since then. In fact, you can say this is a perfect looking downtrend chart. So there are three moving averages here. We have the 50-day, 20-day, and 10-day moving average. The 50-day moving average is the grey line, and whenever you see the grey line above the share price and the other two moving averages, that means the share price is in a well-defined downtrend. In fact, the share price has touched that 50-day moving average about 3 or 4 times, and every single time it gets right on that moving average, it falls away again. So this is a well-defined downtrend. You just have to wait until this downtrend breaks before you take a position, if you want to take a position. The only reason you might think of taking a position is if you're only a buy and or long-term buy and hold investor, and you think prices around 80 to 85 cents are good value for this company. That's the only reason you might want to take a position. I am not a long-term buy and holder solely. I do look at the sentiment in the share price, and at this point in time there is negative sentiment. The momentum of the share price is down, and I just want to see some signs of a turnaround in the share price. And that's it for this March quarter Appendix 4C for a Damstra company I am interested in buying for the long term. I just want to wait and see until the share price shifts around and the sentiment change. We don't know how low the share price can go. It could go to 50 cents, 30 cents, maybe even 10 cents. We just don't know. We want to see signs of the turnaround. If you do have questions, maybe you believe I'm completely making a mistake by not buying in now, I'd love to hear your opinion. Otherwise, I'm not a financial advisor. So if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.